Credit card debt can feel like a treadmill you're stuck on. You run, you sweat, and somehow you stay in the same spot. Today, I'm sharing a practical plan that uses real money moves, not hype. This isn't about big dreams. It's about small, repeatable actions that compound. Here's a system that works even if your budget has holes and your paycheck is irregular. It pairs the avalanche mindset with smart habits that guard the money you already have. First, you have to stop the bleeding. That means no new charges, not until you're actually paying down debt. If you must buy something essential, use cash or a debit card and keep a strict limit on every other card. Second, pick a target and stay with it. Start with the card that costs you the most in interest, or the one due the soonest, and put everything you can toward that balance. Don't spread your extra payments across all cards. That slows down real progress and lets interest pile up. Third, create a simple, honest budget you can actually use. Write down every dollar you earn and every dollar you spend for a full 2 weeks. The goal isn't perfection, the goal is clarity, so you can move money from where it sits to where it matters. Fourth, find the extra money. Look for small cuts that don't sting, like stopping a streaming plan you barely use or dialing down dining out. Sell things you don't need or use, and redirect the proceeds to debt. If you can pick up a few hours of work a week, that money goes straight to your debt pot. Fifth, automate what you can. Set up automatic payments to your debt account so you don't rely on memory. Create a weekly check-in on a fixed day, even if it takes 15 minutes to adjust your plan if prices or paydays shift. Sixth, consider a balance transfer only if the numbers really work. If you can move a high-interest balance to a 0% offer with a fee that's worth it, it can buy time. Read the fine print on transfer fees, the length of the 0% period, and what happens after it ends. If the monthly savings are smaller than the cost of the transfer, don't do it. Seventh, think about a small emergency fund, even if it's tiny. Aim for $250 or $500 as a starter. This fund protects you from slipping back into debt when an unexpected car repair or medical bill shows up. Eighth, keep new debt completely off the table. Practice saying no to non-essential purchases and use a one-in, one-out rule for any new card. Or better yet, don't open new cards at all while you're paying down debt. Ninth, use windfalls wisely. Tax refunds, bonuses, or cash gifts should go toward the debt you're attacking. When the debt you're targeting shrinks, transfer the freed minimum payments to the next card in line and keep building momentum. 10th, track progress in a simple way. Create a debt map with the balances, the APRs, and the monthly payments. Update it weekly so you can see the pace you're gaining rather than the pace you're losing. Now I'll walk you through a concrete path you can start tonight. It's a blend of calm discipline and a little pressure when you need it, without turning your life upside down. Step 1 is to gather the numbers. List every credit card you owe, the current balance, the APR, and the minimum payment. Put them in one place so you can see the full picture, not a bunch of little ducks scattered across different statements. Step 2 is to choose your target. Pick the card with the highest APR if you want to save interest, or the card with the smallest balance if you want a quick win. Either way, you'll throw your extra money at that card until it's paid off, then roll everything to the next one. Step 3 is to free up cash. Review your last 30 days of spending and mark items you can cut for the next 2 or 3 months. Try a 2-week challenge where you only spend on essentials plus debt. After 2 weeks, you'll know exactly where to tighten more. Step 4 is to set up automatic payments. Have your bank send the minimums to each card and send any extra amount directly to your target card. Automatic systems do a lot of the hard part for you, so you don't have to rely on willpower alone. Step 5 is to protect the plan. Save the emergency fund, even if it's small. This helps you avoid robbing your debt payments when a surprise happens, like a flat tire or a medical bill. Step 6 is to find extra money, fast. Look for subscriptions you don't use, switch to cheaper plans, and cancel anything you don't truly need. Use the saved money to push more funds toward your debt. Step 7 is to consider a side hustle wisely. If you have a skill you can monetize in 5 to 10 hours a week, choose a simple route: freelancing, tutoring, online gigs, or doing odd jobs for neighbors. Reinvest every extra dollar into the debt until it's under control. Step 8 is to maintain a lean lifestyle. The debt payoff period is a temporary season, not a permanent norm. Remind yourself that money saved now becomes freedom later, and that keeps you motivated. Step 9 is to keep after the smallest wins. When you pay off a card, celebrate quietly, then celebrate again by telling yourself you're getting stronger. The momentum from small wins compounds, and you'll feel the shift emotionally as well as financially. Step 10 is to keep the plan visible. Put the debt map on the fridge or a whiteboard and update it weekly. Seeing progress in real time keeps motivation high and fear low. Let me show you how this looks with a simple example, so the math feels tangible rather than abstract. Suppose you have 3 cards. Card A has 18% APR and a balance of $3,000. Card B has 22% APR and a balance of $2,000. Card C has a 15% APR and a balance of $1,500. Your minimum payments total $150 a month across all cards. Your plan is to pay the minimums on B and C and put every extra dollar toward A, because A is the most expensive debt and it's the one slowing you down the most. Let's say you can cut $200 from your monthly expenses and direct that toward debt. Your total monthly payment becomes $350 for A, while B and C just receive their minimums. In the first 2 months, you would make a significant dent in Card A. You would reduce the principal on A faster than if you split the extra money across all cards. After several months, Card A might be paid off, and then you'd roll $350 into Card B's payments, then into Card C, until all are finished. Now imagine you could add an extra $50 a week by a small side job. That's another $200 a month toward debt. Suddenly, your monthly payments toward the target card jump to $550 or more. The debt payoff timeline shrinks sharply, and you begin to see a real downward curve rather than a flat line. This is not magic. It's a disciplined approach that focuses on a single target at a time, while preserving enough to live on and avoid new debt. The key is consistency. You show up, you do the math, you move money, you update the plan. There are a few common mistakes you should avoid. First, don't chase a quick win by transferring a balance without considering the long-term cost. Balance transfer fees and the end of a zero-interest window can erase any immediate savings. Second, don't rely on luck or pay the minimum now and hope thinking. Debt pays attention to math, not wishes. Third, don't abandon the plan when life gets expensive. The best payoff comes from showing up on the hard days as well as the easy days. If you're feeling overwhelmed, break the plan into 2 small goals. The first goal is to stop new debt entirely for the next 30 days. The second goal is to reduce one card's balance by 15% during that same period. Small, steady goals beat big, vague promises. A weekly rhythm helps you stay in control. Every week, spend 15 minutes mapping out next week's expenses. Then take 15 minutes to review your debt balances and update the plan. If something doesn't fit, adjust quickly and move on. Your mindset matters as much as the numbers. See debt payoff as a form of self-respect. You are choosing to direct your resources toward a future you want more than the instant gratification of a new purchase. If you keep that mindset, the plan becomes part of who you are, not just a temporary project. Now to recap the core idea. Start by stopping new debt and focusing every extra dollar on a single high-priority card. Build a tiny emergency fund to avoid new debt from surprises. Cut unnecessary costs, seek extra income, and automate payments so the plan runs itself most of the time. If balance transfers make sense, use them cautiously. Keep a visible plan and review it weekly. If you want the practical tools to go with this video, I've added a simple printable debt map and a 1-page budget template in the links below. They're designed to be easy to fill out and to travel with you as you move from plan to payoff. You don't need a fancy spreadsheet to win this. You need a clear map and daily discipline. Before you go, remember this is a fight against time, not talent. The faster you align your money with your priorities, the faster debt loses its grip. The plan is not about deprivation, it's about creating room to breathe later on. If you found this approach useful, please like it and share it with someone who might need a clear debt path. If you're ready to commit, hit subscribe so you don't miss the next installment in this debt series. I'll release more practical, doable steps that build real wealth over time. And I want to hear from you. Comment below with the card you're targeting first and what small cut you're trying this week. Let's build momentum together. Remember, you don't have to do this alone. Small steps, steady pace, big results. This is your moment to take back control of your money and your life. You've got this.